Hello and welcome to our 10th episode of the new series Think Abundance. As you know, we discuss all things that make us move forward, that help us create abundance in our life. So we discuss articles, stories, books, information, and anything that will help us create abundance in our life. So this is the series that we have started around 9 weeks back, and today is the 10th episode. In this episode, we are again going to talk about wealth creation and which is the best asset for you to create wealth. All of us put money into different assets, like most Indians do their investments in bank FDs. Almost 60-65% of the Indians put their savings into the bank FDs. And all of you know that currently the bank FD interest rates are dropping like there is no bottom, so it is going down with a very high rate. Even PPF is one of the more popular investment destinations, especially for the working class people, because it also offers them some tax saving. However, if you see over the period of years, the interest paid by the government in the PPF account is also coming down. Right now, it is at 7.1%, and it only keeps reducing every year. So that is where most people put their money, FD or PPF, which I call as a category as fixed income instruments. The second asset class where most people park their money is in gold or silver, that is typically in the category of commodities. So we keep accumulating gold. We Indians have the habit of accumulating gold, but we normally never sell it. It gets passed on from generation to generation. So that is the second asset class, gold and silver. The third asset class is real estate. Unfortunately, there is not much data in the real estate sector because it is still a very unorganized sector and there is very little data available. Plus, the real estate sector as a whole is marred with a lot of litigations and legal issues. So there is no clear-cut data available just even for the comparison. But the past data that I have shows me that real estate currently is in a bad shape. The appreciation on land on or even the properties like flats and commercial properties like shops, the appreciation is not much as of today. As of the current year in 2021, the real estate space is actually suffering for last 5-6 years. And the next asset class is equity market, stock markets, which is again a popular asset class. However, not much of the population invests in this. Approximately just about 5% of the people in this country access the stock market. They access it via two different routes. One is the direct route, that is by buying stocks directly in the market, and second is the mutual fund route. Recently, from the efforts of SEBI and AMFI, the mutual fund space is seen some great action, and a lot of Indians are putting their money into the mutual funds. So overall, today I will share with you some data to understand which of these assets are good, which is the best asset, what are the returns that this asset give, and all that stuff. We will see through I will share with you a table in which we will see this data, how it appears. So this is the data I wanted to share with you. Here I am going to compare the growth of rupees 1 lakh. I have taken a common investment, somebody who puts 1 lakh rupees in these multiple assets, how this money would have grown over the period of years. And the period for consideration is March 1981 to March 2021. So it is a 40 years of statistical data. So this data is again sourced from Bombay Stock Exchange, BSE India website, and the Handbook of Statistics on Indian Economy, RBI. So this is authentic data, and we are going to see how different asset classes have performed in this particular thing. So here I will show you The inflation has been during this period of 40 years averaging at 5.61%. So that means 1 lakh invested today, that is 40 years back. If somebody invested 1 lakh rupees in March 1981, then the value of that 1 lakh has been eroded by inflation, such that if something, say a television or a car would be costing 1 lakh rupees in March 1981, the same car would cost 9 lakhs, approximately 8.89 lakhs in the month of March 2021. So that is the erosion in buying power of money over 40 years. So something which you can buy at 1 lakh, you will need 9 lakhs approximately 40 years down the line. Gold has given a return of 8.75% compounded over the years. That means 1 lakh rupees invested would have grown to 28.64 lakhs in the period of these 40 years. And this value, net value, that is, if I reduce, remove the inflation 8.89, that is the loss of buying power of rupee from this money or wealth that was created by gold, then the net money, that was net valuation at in March 2021, would be 19.75 lakhs worth of money. Silver has given a return of 7.92% CAGR over these 40 years. That means 1 lakh rupees invested has grown to 21 lakhs and 9,000. And we will need to remove the effect of inflation to find the net valuation, that is 12.20. So somebody invested 1 lakh rupees in silver would be left with 21 lakhs, and the real value of that 21 lakhs or the buying power is just 12.20 lakhs in the year 2021. Bank deposit average rates have been 8.24 over the period of, so somebody would have kept a deposit of 1 lakh rupees in the month of March 1981 and kept renewing it, then his money would have grown at a rate of 8.24% per annum and would have created a corpus of 23.73 lakhs over a period of 40 years. And this money was really worth 14.84 lakhs after considering the inflation, right? So next is company deposits. We are considering that the company deposits give higher interest rate, typically 1% more than the bank FDs here. So 9.21% is the average return on investment created by bank FDs over the last 40 years. So 1 lakh rupees has grown to 33.94 lakhs over the 40 years, and the net value of this is 25 lakhs approximately. That is how the company fixed deposits have given. And here I am only considering the effect of inflation, not the taxation. So the net valuation would even be down if we consider taxation also. Now we consider equity markets. The benchmark of equity markets is the Bombay Stock Exchange Sensex. So I am considering this. It has given a return of 14.53% CAGR over the last 40 years. So somebody who invested 1 lakh rupees in March 1981, his valuation in March 2021 would be 2.27 crores. And now I remove the impact of inflation from that, and he is left with 2.18 crores. So this is how the different asset classes have created the return on investment for the investors over a long period of 40 years. So now if we consider the net ROI for each of these asset class, then we will see that gold has returned 7.74% CAGR, silver has returned 6.45%, bank deposits have given approximately 7% returns after adjusting for the inflation, company deposits have given 8.4%, and the Sensex has given 14.4% CAGR returns in the last 40 years. Now, earlier I said just about 5% of the people in this country go and invest in the equity as an asset class because they have a fear of losing money. They think this asset class is risky. Now, if after seeing this data where this asset class has outperformed every single asset class that we see here on the board, even real estate for that matter. It has outperformed. It has created humongous wealth for the investors. Even after seeing this data, if you feel that this asset class is risky, only God can save you. So the best way to access the stock markets, the equity asset class, is through mutual funds, equity mutual funds. And equity mutual funds in India have created a huge amount of wealth for its investors. And equity as a asset class offers good amount of liquidity to the investors. It gives huge amount of transparency, and it is very, very convenient. You don't have to do anything today. The equity investment can be done completely online. It is completely safe. And the best part of equity as an asset class is it has got the highest amount of regulations in this country. There are 3 regulators for equity, especially the mutual funds. We have the SEBI, which is the Security and Exchange Board of India. We have RBI having its control on mutual funds and this equity as asset class. And third, we have got for the mutual funds AMFI. So this is the most regulated asset class. Secondly, it is also the least taxed asset class in all the asset class. Plus, it gives very, very good inflation adjusted returns. We have just seen them. So give up your notion that equity investing is risky. Invest in equities, especially for the long term. If you have an investment horizon of 7 years or more, then according to me, equity is the safest asset class. If you need any help in accessing this asset class, in investing your money, we at FINDAS can help you anytime. Just give us a call, get in touch with us. I'm sharing my contact details in the description here. Bye bye. Take care. Have an abundant life. That is all for today's 10th episode of Think Abundance.